what's going on? Good morning to you all. Chris here. Want to bring you guys a little update on Bitcoin, what I'm showing, and the key area that I really want to see us hold here, guys, and some of the reasons why we really need to hold this. So if you guys like these videos, I really appreciate you guys. Give me that 100 thumbs up like you guys been doing. That's awesome. And last video, I think we even hit 200, so I'm really thankful to each and every one of you guys for that. So much appreciated. Like I said, I'll continue to do this, guys. You do that for me, we'll continue to roll. So guys, what we're looking at here is Bitcoin, and it is at 36.21 right now. And the key area that must hold, in my opinion, is this 3600. Now, why the 3600? 3600, we have strong support here, guys. After this big fall, we came down and hit it here. We had our reaction. We came back up. We came back down, hit it again, and you also see this long wick. So that was the bulls buying that up, right? So that has formed our support line here around that 3600, and we also have this trend line from this triangle that we're in here, all converging to the same point. So say we were to break down out of this and break down, most likely, guys, we would probably come down to around this 3374 area, and then right down in here around that 3200. We could see if we get a double bottom. We may not even stop at a spot like this, guys. It could maybe just go straight down. Now that's to the downside here, guys, and I just want you to be prepared for that. So I think 3600 is a key area that Bitcoin really needs to hold. Now we've just been kind of working sideways. We're having that consolidation. We're working to the end of this, the apex of this triangle here, and we're going to have to see what happens. Like I said, we're still working up this trend line here. Now on the upside, guys, if we can get over these moving averages that are also overhead right here, our target to the upside would be around this $3,800 is where I would target if we had a nice little run out of here, which that's probably, you know, about close to $180, $200 or so there that you can have in profit, guys. And that's also going to converge with the top trend line here, and also this 200 moving average that's coming down on us on the 4-hour chart. A lot of guys like to enter their trades on the 4-hour chart and the 1-hour chart, and you know, I think the 4-hour chart's very valuable to pay attention to the moving averages like the 200, the 20, the 50, and all that type of stuff, guys. So really pay attention to those as well. And the next thing I wanted to look at was our Fibonacci. We're going to look at it in two different ways. Right here, guys, we're going to bring it up and we're going to see where we're landing. And also, guys, leave it down low if you think we're going to hold 3600 as support, or if we're going to get a nice bounce off it, or if you feel like we're going to break it. Remember, we want to look for those candle closes. On the 4-hour, you want 2 candles to close below it, and basically on the daily, guys, if you close below it, some people wait for more confirmation. Some people say that's a close, that's significant enough, and I'm going to go for it. So you guys have your preference on those type of things, but on the Fibonacci, and leave it down low if you think we're going to hold or not. And on the Fibonacci here, when we came up, guys, we have also lost the 0.618, which is also acting as overhead resistance now. So guys, I'm looking at this support, I'm looking at this trend line, I'm looking at 0.618 overhead, and there's a lot of things on low volume that could potentially push us to the downside. And that's why we've been looking at the downside so much, because the trend has been down, guys. And when the trend's been down, you don't want to fight the trend. You have better odds of it breaking down than you do of it breaking up. It's probably about a 70-30 if you do a lot of reading, but in this market with how things have been, it could very well be even higher odds, you know, 80-20, somewhere in there. Now, guys, anything can happen in this space, as we know. Just like many people were expecting a huge dump off that ETF news, and that didn't happen. Weird things can happen in this market, and that's why you have to be prepared for the upside as well. That's why we have upside targets, we have downside targets, we have sideways targets. And people in the comments, I know there's been a few who say, oh yeah, plan for the upside, downside, sideways. Yes, absolutely, that's correct. We plan for everything. We plan for the upside, the downside, and sideways movements. That's being a trader. And that's what many people here have been learning as well. You have plans. You're not just an eternal moon boy. You're not just an eternal bearer. You know, you have to be able to play both sides if you want to be successful in this market. And that's what I want to teach you guys. So all the people who really want to learn and enjoy this, I'm so thankful to be here with each and every one of you, and I'm proud of each and every one of you for learning as much of you as you have learned. So now that we got that out of the way, guys, next thing we're going to look at is the decreasing volume. All right, because volume plays a very, very important role in technical analysis. So we'll take this all the way back here, guys, to the dump, basically. And you can see the volume still is just dying like that. So as it's getting smaller, you have less liquidity in the market. So therefore, if a big whale does move it either to the upside or downside, it's going to break very hard and extreme to either way when there's not a lot of volume. So that's kind of the dangers of being in a market like this as well. If you have stop losses or different things, that there's not a lot of liquidity, so the market can move up and down really fast. Now the benefit of that is if we're trading and we're on these, you know, people's coattails, the institutional investors, if we ride their coattails, then, you know, we can be successful. And that's what you want to do, guys. There's going to be the market makers, and we're definitely not market makers, so we have to ride their coattails. We have to go with the direction of the market, and if the direction of the market's down, then that's what we have to do. So, you know, guys, I'm not trying to go on a rant today, but I'm just trying to explain to people that you want to have targets. You want to have upside, downside, sideways targets, and you want to be prepared for any way. You just can't be, you know, 100% bull or 100% bear. So I wanted to bring that to you guys. Pay attention to that. We're not up above the 0.618. Now we're going to look at it another way too, from this initial fall, and see if we've gotten over that 0.236, which is very difficult to get through, guys. And I'm going to get this stuff off the screen here, and we're going to step back for a second, because I know we did get up above it, guys, for a moment. We'll go about right off here, guys. That swing high to swing low. Yeah, so we also have this 0.236 here around that $4,000, which $4,000 is going to be a very hard thing to get up above too psychologically. Do you see all this overhead resistance here, as well as the 0.236 and also the psychological barrier of 4,000? Which you guys can do a lot of reading on psychological things like round numbers, where a lot of guys will take profits or, you know, get into the market, different things like that. So we want to pay attention to that, guys. We're not up above the 0.236. We have our, on our 4 hour here, our moving averages. They're overhead, they're pushing us down. So you guys leave it down low. Would you agree that the way of the river, if we're looking at it like that, the way of the river is down, right? And what we want to do is ride the river, guys. So, you know, just be prepared. That's the biggest thing I can tell you, is be prepared and just continue to study, guys, and keep learning. And, you know, we're gonna get through this market together, and when this market does turn around, we'll be ready and understand the different characteristics of a bull market. You know, guys, just like this massive fall here, you see how far we fell and how quick we fell, and then we had that reaction. A lot of people here, when they sold, they were selling down in here. They were so scared. Right here's some retail investors getting very nervous, and then all of a sudden you can see here we bottomed and the short-term trend reversed. And you see the 20 moving average here, how we got up above it? That's why moving averages are so important, guys, because they're going to take the average of how many days, 200 days or 20 days or whatever, and they're going to compress it for you, and you're going to be able to watch these and see if they're curving up like we're going up in an uptrend, or if they're going down. And remember, guys, they're going to lag behind because they're taking all this data and information. Now, if you guys use the 20 EMA, that's what I like to use, the EMA. It's going to be front weighted, so the data is going to be up front more so than it is taking data from the 20th day. You're going to have more up front the first 5 days, 10 days, different things like that. So I like to use the 20 EMA, guys. Personally, the 20 EMA, the 50 moving average. I like the 100 moving average and the 200 moving average. Those are the ones that I like to really pay attention to. That's kind of how I set up my chart. But the way has been down, guys. Do you see these right here? Look at them. Have we closed up above this right in here? We haven't yet. We've wicked up to it when we tried to make a move, but we couldn't get up above and close up above. And when we got up above it here, we were up above it, but we didn't really make any moves. We just went sideways, and then we fell and closed back down. You see where we closed there on a strong candle close through the 200? Then we got pushed back down. So, you know, guys, pay attention to this stuff. We're going to also look at the Bollinger Bands quick so we can look if we're getting expanded or contracted. This is a very important one to pay attention to. So right now, guys, it almost looks like we're getting that squeezing. Remember how we talked about we're moving sideways? So that band's going to squeeze, and then that's going to tell us that at some point we're going to have that break to the upside or to the downside. So that's why these bands are so important. Which you can tell by, you know, the human eye that you're moving sideways, so therefore there is going to be a break. Do you see all these bars where we're just moving like that, just sideways? We're just waiting. Now do you see them getting closer together? And here, when we had that move up, they expanded. So Bollinger Bands, in my opinion, are a very, very strong indicator. Especially look down here, guys, off that hammer. It wicked down to the bottom here. Guys bought that up. So pay attention to the middle band that's in here. And then when this starts to contract, that's a big sign for you. And also if volume's dying off as we're moving sideways, just wait for that move. And that's what happens whenever we contract. So guys, next one I'm going to look at here is the MACD. I want to see what that's looking like on the 4 hour. Just kind of give us a little bit of an indicator how the day is going to go. If it's just mostly going to be that sideways action. Let's see. There we go. Sorry guys, computer's running a little slower today. Alright, so on the 4 hour, guys, the histogram's ticking down. And remember, you can always draw like a trend line on those as well, which will help. So you take that and just kind of draw the direction that it's going. Now, when we had this cross, we had that move up. And then here we came back down. This is what I wanted you guys to always be careful of. Really look for the full cross. Like here we had that full cross there. Sometimes you'll have the fake pump outs when all of a sudden you go to that signal line, then you bounce off it again. We could bounce off it again and continue to move up, or we could break it. So be prepared for both sides, guys. And remember, like when you see this histogram ticking up like that, a lot of times a move's going to happen, and there's the move right there. I think histogram and MACD is an underrated. I know a lot of guys use it, but I really do believe it's underrated in terms of its power. I think it's something that's very, very strong indicator, especially if you're looking at it like on the day or the week. Because guys, if you would have even looked at Bitcoin on the day or the week, you would have seen that MACD cross, and you could have got out of Bitcoin from the all-time high around like $17,000 or $16,000, which still would have been a heck of a time to get out as opposed to what's happened. So there's a lot of benefits to the MACD as well if you look at it on a longer, or a step back on like a day or a week, different things like that. So guys, also pay attention to this trend line here. Now that I'm just seeing it, kind of put it like right in there. So you see how everything's just coming together. Sideways movement, guys. We're at 36.25 right now. Leave it down low, what you think is going to happen. Not a ton to talk about right now, guys, until we see which way this is going to break. So in my opinion, it's just being patient. Just like you saw this break, guys. We had that huge move, and then we had the consolidation here. And now are we going to have another move down? Right? Just like when you look at bear flags. Bear flags are a great example. So we're going to go over this one right here. It's textbook bear flag. This one right here. So do you see this huge drop that we had? The flagpole with this huge volume there. That's exactly what it's supposed to do, guys. And then here we had, you know, whatever, 50 hours of moving sideways. Just like that. And look at the volume drying up. And then we got to the point where the volume was drying up and contracting, and then we had that break again. You see that on volume, and you would have known about this candle right in here to get out, and you could save yourself all that, or you could have shorted it from there, and you see that high volume coming back in. So look for these things, those bear flags. I mean, that's textbook, guys. And pay attention to trend line breaks. And this is what I go through. I back test things. So I'll pull a trend line from here, I'll look, bring it down through here. So look, when this broke, guys, we had that nice run up here. And then you can take another trend line, look on the other side. We can take it from like right in here and bring it up. And look, when this trend line got broken, we had that fall, continued fall. I see another one potential here, guys. Look at that. And then we had our fall. So that's why I'm into trend line breaks, guys. They're just so powerful. And you know, if we master these and we learn these, you know, you're going to be right 70-80% of the time, and we'll have a plan for the upside and downside anyway, so it won't matter. But if you guys like these videos, please give me that thumbs up. Write down low in the comments what you think, guys, and tell me if you're prepared as well. Do you guys have a plan for the upside, the downside, sideways action? God bless each and every one of you.